Hey guys, this is Logan Freeman with the LiveFree Investors Podcast. I interview investors and business owners who share investment advice so you too can live free. Today, I'm talking to Jeremy Roll. Jeremy, in a few sentences, tell us who you are and what you do.
Yes, and Logan, we're recording this in June of 2020. I've got to give my COVID hair disclaimer. We were just
I love it, man. I love it.
It's horrible. I'm finally going to get a haircut in a few days. It's embarrassing, but this is about the best I could do. So anyway, yeah, thanks for having me on. I hope this is helpful for some people. So I am what I call myself a full-time passive cash flow investor. Been investing in passive cash flow, mostly in real estate, but other stuff too, since 2002. That cash flow actually got me out of the corporate world back in 2007. So I've been at this for about 18 years now, generally, and then full-time over 13 years now.
All right.
And without sounding like an infomercial, and I really don't want to, I have nothing to sell people, passive cash flow has completely changed my life.
Yeah, absolutely. So you're definitely the longest term passive investor that we've had on the show, and you've seen, ups and downs, and I know you're extremely analytical. I've seen you in person on panels and things like that. If you had to dial down what's going on with coronavirus and commercial real estate right now, and I know you can't do this in, a minute or 2 minutes, but if there was passive investors right now out there thinking about investing into a project or, just getting started, is right now a good time or a bad time?
Great question. So, yeah, remember, I personally invest in relatively low risk passive cash flow that's meant to be stabilized and predictable. That's why I got into all this after the dot-com crash back in 2002, more for predictability. So for me, if I'm looking for predictability, now is a tough time to invest because we're in the middle of the recession. So make it really simple, actually. I can make this quite quick. COVID is obviously a huge, disaster and unfortunate situation in many ways. But when you really take a step back from it, it's a recession. It's probably a very bad recession. In fact, not probably. It is a very bad recession.
Yeah.
But the easiest way to think of COVID-19 is we're in a recession. And what happens in a recession with real estate is that you have to wait for certain things to adjust, like pricing, market prices. And that stuff takes a long time. It's unlike the stock market. It's very slow.
Sure.
So the normal recession, it takes a year or two for that to kind of play out. This time with stimulus, it might be delayed a little longer even because I think that a lot of the reality won't hit us until after the elections when stimulus probably wears off. So for a passive investor like me, especially one who's looking for more stabilized cash flow, I'm trying to avoid getting in when the pricing is wrong. And we're still kind of at peak pricing or very close to it, what would have been a few months ago before this started. So my suggestion, and what I've been doing personally, has been sitting on the sidelines and waiting and I'm waiting to discover three things. I'm waiting to discover true vacancy rates once the stimulus is gone, which will then cause probably an adjustment in market prices, probably downwards, which will then cause an adjustment in profits and possibly even an adjustment in the multiple people are willing to pay for properties.
Sure.
So if you're trying to be ultra conservative, you've got to wait until these dominoes fall, and it's going to be a while. So unless something kind of no-brainer comes up, I'm mostly on the sidelines right now.
Sure. I mean, all of that makes sense. I was listening to Hunter Thompson's podcast recently. He had another economist on, which he loves talking, economists and all of those different things, which, is fun to listen to as well. But it seems to me that everybody has an opinion. And a lot of times they differ, from one point to the other. But, it's really interesting to listen to Hunter because he is a real estate investor and he wants to advocate for it, but he also sees the signs, right? And so it's been fun to listen to his episodes and his banter with guys like Richard Duncan and those folks, man. I mean, it is hilarious sometimes the just the back and forth that they have on their podcast. It doesn't ever get what I'll call it doesn't get combative, but he definitely doesn't agree with everybody. And he's smart enough to kind of talk the talk with those folks. And I actually really enjoy listening to some of those podcasts with those economists. So I'm curious.
Yeah, Hunter's actually.
Sorry, go ahead, Jeremy.
Hunter's a friend of mine. And in fact, he just moved last weekend, but he used to live 10 minutes away. Now he's about 20 minutes away. I'm in LA. That's still pretty close for LA, actually very close for LA. And so I completely understand. I was actually coincidentally the first person ever on his podcast. I'm very familiar with his podcast, and I think he does a really good job. And he has actually some really unique people on too.
Yeah, he does.
Which is awesome. So yeah, I actually think he does a really good job with the podcast.
Yeah, I love his podcast, and I look to it honestly for a lot of answers. And he even has folks on from the CDC, and things like that. I mean, it's great. And if you haven't checked that podcast out, you should definitely go over to Cash Flow Connections and check Hunter out. I'm going to be on Hunter's podcast hopefully sometime soon, and he's going to be on here as well. We probably won't get as intellectual as he wants to because that's just not who I am, but we can talk about a lot of other things that I think will be of interest to folks. So, Jeremy, what's the best thing about being a passive investor in your mind?
The best thing about being a passive cash flow investor is freedom. And, certainly the worst case scenario is its predictability, in that if you're in the working world, you have a paycheck and you have the cash flow, you got more predictability, which is why I got into it compared to the stock market, for example. The best case scenario is to be able to get out of the corporate world is freedom. And, a really good example is this weekend is July 4th. I just decided to take Monday off. I don't have to take a sick day or a vacation day, deal with all that. Now that's an easy example. I can get into a lot of other examples, but having that, freedom is huge to be able to make your own decisions, and the passive cash flow can really provide that. Again, I have nothing to sell, so I'm just not an infomercial here, but it's the reality of thankfully what I've been able to live through.
Yeah. I mean, even being an active, because I am much more of an active investor and sponsor than I am on the passive side. My goal is to get to the passive side of things at some point. But even on just thinking about my day to day, I get to direct what I focus on, and that's exciting for me. And having that control and that freedom is why I do what I do as well. So thank you for sharing that. So I know you're a big reader, and I do look to your newsletter quite a bit to get kind of your take on current circumstances. But there's a lot of things going on today in today's economy, and keeping up to date on all of those opportunities and trends can be a real challenge. So do you have some resources that you rely on, or how do you go about forming your own opinions or even investment theses?
Yeah, great question. So you're right. I do read a lot. I read actually at least 2 hours a day.
Yep.
And it's just a habit I got into. And I feel more the pressure of having to stay on top of things because the way that I invest, I have to think really far out.
Mm-hmm.
When I go into a deal, I'm kind of sometimes locked in for 10 years based on a 10-year loan. So I have to think very far out, and I got to try to keep on top of the trends and kind of try to avoid the landmines. And I've got to think not just about what's coming up in the next year with COVID, but way down the line with different technologies and what's going to be in demand, et cetera. So I do a combination of two things. I try to read the mainstream media to get a better sense of consumer confidence and consumer perception and where we might be headed with that, because consumers drive 70% of GDP is consumer spending. And the other thing I do is try to also look at stuff that isn't mainstream media and that's more focused on pure data. And so I want to try to get out of the weeds of the media and actually understand what's really going on under the surface, and maybe to help predict where we may be heading as opposed to whatever the headlines say, which aren't always. Sometimes they're politically slanted, sometimes they're just biased for other reasons. So I try to do a combination of both, and that's why I do a lot of reading. It's not just like looking at one or other side.
Yeah. I think that this is I don't know if this is a myth or this is reality, but it's said that Warren Buffett in his heyday, I don't know if he still does, but his job was to read, right? I mean, he was reading 8 hours a day, I think. I don't know if that's true or not, but sounds exhausting. I would love just to get an hour or two a day, more or less just a week, but with young kids and running a business, it's somewhat difficult. So I rely a lot on audio, which is great. But I do miss kind of getting in front of a book and reading. So do you know if there's any truth to Warren Buffett reading 8 hours a day?
I actually recently heard he reads at least 6 hours a day. Now, I mean, honestly, 6 or 8 at that point, I don't really think there's much difference.
Yeah.
I can see it, though. I got to tell you, because if you think about what he set up, he's got a company, he's got all these people under him. And if he wants to, and that's what he wants his job to be, he could be like the chief information officer, and then he just information. I mean, that's what he chooses, right? He's going to have people who can run everything. So, by the way, you have to understand, like, for me, for example, I read a lot in the morning and a lot at night.
Yep.
Okay. So if he's up early and reading at 6 a.m. to 9 a.m. and then he's reading from, 7 to 10, I'm just making that up at night. Yeah. That's 6 hours, but it actually hasn't interfered with any type of a work day. So it depends on how much of a focus he wants to make and how much a priority he wants to make and whatever else he's doing in his life.
Yes.
I tend to kind of not schedule calls or meetings if I can until at least 11. And it allows me to do 2 hours right in the morning from 9 to 11, plus some emails at the same time. Then I'm always doing reading at the end of the day just to keep up with what's going on anyway. That's how I manage it. But, 6 or 8 hours is going to cut in. But I have to tell you that, it's really odd what happens, actually. The amount that I read of the economic news. You just absorb it. You don't even realize it. And then you wake up one day, 2 months later, and you're on a podcast like this, and somebody says to you, what's going on with COVID? And then you realize you took all this information and you actually had this really good high level thought process you never even knew you had. It's really weird, but that's what happens. You do a lot of reading.
Absolutely. I mean, I remember books back that I read 6 years ago that I pull out of, and there's always books like Wayne Dyer's, 10 success or secrets for success in inner peace that I always have near me that I'm just picking up on a regular basis. But I couldn't agree more with you. I mean, I read Crucial Conversations probably 5 or 6 years ago, and that book, I still just pull things out of it, and I love to be able to, have that recall, right? And it's really important for me because I use that stuff on a regular basis. So, okay, that was good. So what's the best advice that you've received as an investor? And this is a very broad question, so take it wherever you want. But if you could dial it down to some of the best advice, I'd love to hear that.
Yeah, let's go with just a few snippets. So first one's a Warren Buffett quote because it's very applicable right now. Mm-hmm. And hopefully it doesn't sound the wrong way for anybody, but he said it, not me. So, be greedy when others are fearful and be fearful when others are greedy. That's one of the top things that I do as an investor. I've been sitting on the sidelines since late 2016. I was afraid of high prices. A lot of deals were happening. I was trying to sell. Now I'm actually looking forward to the eventual adjustment in prices as a result of the recession to then, jump back in with 2 feet when the timing's right. And that's, Warren Buffett is a master at that. Sure. And I think it's absolutely imperative. So that's number one. Number two is start as early as possible. I've actually been working with my son. It's funny with COVID, one of the advantages, he's not at camp. Mm-hmm. And so he's in the middle of reading a whole bunch. He's 12. I'm having him read a whole bunch of old deals that I went into, explaining how all day works across all the asset classes. He's reading Rich Dad, Poor Dad, Cash Flow Quadrant. I'm constantly sending him news stories and even videos that I watch just in terms of mindset. Wow. And so, and I'm lucky because I got this summer to do it with him, and he happens to be interested in it, which
that's great.
Just happens to be. But the bottom line is start as early and young as possible. I actually, real quick story, someone reached out to me, random person, 18 years old. I don't know him at all. We had a call. He's like, look, I'm really interested in real estate. What are the best courses for me to take in undergrad as I'm going through this process to kind of get myself on the right path? I mean, fantastic. I didn't have the benefit of thinking that way back then, and it would have been very helpful.
Sure.
So, and of course, the earlier you start, the more you can benefit from compounding, right? And so, that's a huge thing as well. Mm-hmm. And then another thing for sure is my approach is slow and steady wins the race.
Yeah.
If you go out, I'll give you an example. I've been literally sitting on the sidelines since the end of 2016. I did the same thing between 2005 and 2008. 3-4 years of frustration, of people thinking you're wrong, of people questioning why you're not doing anything.
Yep.
And if you having to hold out for this eventual downturn to eventually realize, I did the right thing. That's a long time. I went through literally phases in the past few years of frustration,
sure,
agony, oh no, I'm right. I went through these phases. I'm not even exaggerating. And in fact, I went through frustration twice at some point because it was taking so long, because we just had the longest real economic cycle we've ever had.
Yeah.
Right?
Yeah.
So, but patience and thinking long-term and slow and steady wins the race is a huge, important thing. Warren Buffett is also a master at that. He's been sitting on the sideline for years, and he's done it many times. And that's one of the reasons why he's really successful.
Yeah. That's fantastic. So, I mean, great advice. I was taking notes. Couldn't have said it better myself. So that was wonderful. This is what I call a social show. I use this to promote folks that I believe in and have a lot of respect for. And so I'd love for you to think through, if you have somebody in mind, you can't say Hunter because he's going to be on here pretty soon, but somebody in mind, maybe that runs in your circle, maybe they're not on podcast as much, that you think would be a good, guest to share some of the feedback that I would get from asking these same exact questions. So do you have anybody in mind who would be a good guest?
Yeah, absolutely. Hunter obviously comes to mind, but another one that comes to mind for sure is now a good friend of mine. I don't know if you know him actually. Well, you may know him from the conference earlier this year. Matthew Owens with 1T.
I don't know Matthew.
Okay, so he's actually flipped over 1,000 homes in Memphis over the past decade. He doesn't market nearly as much as a lot of operators. He's kind of under the radar a little bit. I've invested with him multiple times. To be honest with you, if I pass away tomorrow, he's got my entire spreadsheet. My wife calls him for help. That's how much I trust him.
Yeah.
Real story. And I've known him for over a decade. I met him before the last downturn. We've done a lot of stuff together. He's actually a partner in For Investors by Investors, FIBI now.
Great.
And just a really good guy. And he's had a ton of learnings as well. So that's definitely someone I'd recommend you have on.
Awesome. If I can't get a hold of Matthew, I very well may. I do think that he's been in my email just because of FIBI. But if I don't have that, I might ask you for an introduction so I can get him on the show. I appreciate that. Now, this is the most important.
Absolutely. That's very easy.
Yeah, this is the most important question of the podcast. My whole brand, again, like I mentioned, was to figure out and help other people live free on a regular basis. I think I know what your answer is, but on a regular basis, what is your best way of living free?
What is your best way of living free? Well, look, I'm going to say this, and this is maybe not what you had in mind, but I spent years in the corporate world. Look, just to take a further step back from people don't know me, I have an MBA from the Wharton School, pretty well known. I spent over 10 years in the corporate world. I worked at Disney headquarters. I worked at Toyota headquarters. I worked at GM headquarters, big companies, smaller companies too. I had really good middle-level management jobs. The biggest challenge was that I didn't know what I wanted to do, and I was very frustrated because I felt like I was such a small piece of such a big company, and I wasn't maximizing my potential. So I would give you two answers. One is, do what you can. It took me many years to sort it out, but it was very frustrating. But you make sure you really like what you're doing. I love what I'm doing now, and the cash flow has enabled it. But the reality is that I still love what I'm doing. I love looking for investments, and networking all day long with other investors, talking to Logan and other people, trying to find opportunities and sharing updates and everything else. I love it, and I'm very lucky. It's really not even work to me. And so I know that the vast majority of Americans aren't in that position. But I would strongly recommend to do what you can to at least try to do what you love, regardless of how much money you're making at it. It's exactly what I try to teach my kids. Because it's amazing how much of a difference it's made for me once I was able to get on the right path. And, it's very hard to figure out. It may take a lot of experimentation and a lot of time. It took me a long time. But when I finally hit it, it made it just the world of difference. Of course, the other answer you were expecting from me, I'm sure, is passive cash flow. So, just that is what has allowed me to really have a lot of freedom. But I think that it really should be a combination of do what you want, and if you can incorporate passive cash flow into it, great. But I think to do what you want, and it actually makes you happy, that actually is something you like to do, is more important.
That's fantastic. I appreciate that. Spoken like a true investor. Now, Jeremy, I'm going to ask you this question two ways. One, do you want me to ask folks how they can reach out to you?
Yes, absolutely. Yes, it's you want me to answer that? It's totally fine.
Okay, then if they do want to reach out to you, follow you, engage in all of that awesome information that you're dialing down to, reaching out and sharing that with folks, how can they do that?
Yeah, absolutely. So I don't have a website or anything like that. I'm just very under the radar. But people are absolutely welcome to reach out to me. I'm happy to help any way that I can. If you're brand new and you're just curious about passive investing, I'm happy to just share or answer questions. If you're experienced, you want to trade information about operators to invest with, or just ideas or whatever it is, that's great. If you're another investor group and you want to network, I have my own group, and that's great. If you're a sponsor with deals, I love to look at them. So don't hesitate to reach out to me for whatever reason. Easiest way is my email, which is jroll, JROLL, at Roll Investments, ROLL Investments with an S.com. So jroll at rollinvestments.com.
Thank you, Jeremy. And if you also didn't catch that or just want to reach out to me, I can also facilitate a good introduction to Jeremy. But I have to say, you very well might catch Jeremy on the Stairmaster while he is taking his calls, because that guy stays active. So I can't count how many times we've had calls where you've said, hey, I'm just preface this with, I'm going to get my workout in. I do the same thing. So I can appreciate that. This is Logan Freeman with the Live Free Investors Podcast, where investors and business owners share advice so you too can live free. For more insights and ideas on how you can live free, connect and message with me on LinkedIn and on my website today. Jeremy, thank you so much for joining us today.
Thanks, Logan. Thanks so much for having me. Hope this is helpful for some people out there.
It absolutely was. I learned a lot, took a bunch of notes.